I'm here with Todd Ruppert. Todd is the president and the CEO of T. Rowe Price Global Investment Services, an enormous fund management firm out of America, but managing money globally. Todd was in the session this morning about investors. We were talking about the investor. We finally got there. Tell me what points came out of it, did you think?
We could have talked a lot longer on the subject. One of the things that did not come out in that is, I think the industry as a, there's a lack of trust and confidence on the part of investors in the industry. I think we all recognize that. I think we all would like to have that altered. But I think one of the things that the industry could do and be studious about is not do certain things that's gotten us into trouble. I think the industry has gone through so much focus on near-term performance, short-term performance, and raising assets for the sake of raising assets, bringing out new product for the sake of bringing out new product. This is the term long ago back in Silicon Valley about innovate or die, innovate or die. And I think a lot of the product that's been brought around has been innovate and die, and the customers gotten hurt. So there needs to be a civility brought back into there, and there needs to be a close working relationship between the regulators and the asset managers to get more discipline in the practice.
And do you feel that that's going to happen? Are you optimistic that there will be change?
I think I was optimistic back after the .com crash that there would be some change in behavior. But once the market started coming back around, there was still a lot of new hyped product, trendy product that was introduced to the marketplace. I think it just becomes part of human nature. Now, perhaps this crisis was a bit more severe and we will have some benefit coming out of this, but I'm not overly optimistic.
And looking into Europe from the US, because your company's headquartered in the US, what do you see that's different here than what you see at home?
A big distinction for the retail investor is that so much of distribution here is controlled by the banks, whereas in the United States only about 11% is controlled by the banks. So that's an important stranglehold, and the banks need to become better, and the asset managers should be helping them in terms of providing advice. Customers are clamoring for advice. They need advice rather than individual product selection. And that advice business just has not taken off the way perhaps it should do, and over time hopefully there will be more control of that.
And there's been a statistic bandied around about the number of funds in Europe as opposed to the number of funds in the States. We have many more funds.
Right.
Do you think they'll see consolidation in Europe?
I hope so. I hope so. I think you will. From 2000 to 2008 or 9, there were about 11,000 new funds introduced in Europe, while over that same time period, number of funds were decreased in the United States. So average assets per fund in Europe were about 170 million, whereas it's 1.2 billion in the United States. And economies of scale do allow for reduced costs in that regard. So I do hope that there is going to be consolidation. I think under some of the regulation that will take place, and certainly the cost pressures that the industry has been subjected to given the crisis is moving in the direction of some reduction.
Thank you very much for your time. On a different note, I'm going to just ask you what you think of FundForum.
Well, I'm delighted that it's back here in Monaco, but I find FundForum to be a wonderful outlet to just catch up with people that you haven't seen for a while. This year was an interesting CEO roundtable with the regulators, which was quite useful for all of us. And we had an IFAMA CEO dinner. So utilizing an event like this to do those things outside of the conference is positive. Plus, there have been some very good presentations. So yeah, I'm a supporter.
Thank you very much, Todd Ruppert. Thank you.
Thank you.